I'm the founder of Protea Financial, and welcome back. Episode 23. We're getting up there. Still really enjoying this, still having fun, still trying to create a base where we can have conversations with the real intent, which I'm getting to see more and more, is to make the accounting industry better. And I'm just going to share my thoughts on it. It doesn't mean it's going to be life changing, but I must say, though, when I'm sharing the message, it really is to help. But what I'm finding a lot from these conversations is that I am taking the opportunity to re-listen to what I'm saying, think about what I'm saying, and see if there's a way to implement it in my business so that we can be better. Or in the case where it's like communication or topics like that, I'm really thinking about the content that I'm putting out there and assessing whether I am doing a good job at implementing those discussed topics or how I could be doing better on a daily basis. And I've got this sign right here, 1% better every day. And it's something that I truly believe in. Every day I'm trying to do something in my life to be a bit better, be that at work, be that in managing my team, being a slightly better husband, a slightly better father, maybe working out, maybe eating a little bit better. But in some aspect of my life, I'm trying to be just a little bit better so I continue to improve. I want to be a better version of myself every single day, no matter where that change comes from. So we'll continue to talk about accounting topics, but I did want to start a little bit today. Just a quick shout out to the moms out there. It was Mother's Day this past Sunday. Always a very special day in the calendar. And, I'm very fortunate to have had an amazing mother. I still do. I had a great conversation with her on Sunday over, you know, over our phones, just a little video call. Checked in with her, saw how she's doing, said thank you to her. Um, she's great. Probably disappoint her with my brash attitude and shortness at the most times, but she knows she's done a good job. I am who I am because of her. Very appreciative of that. And additionally, a major shout out to my beautiful wife, Candace, for everything she does to look after this kid on a day-to-day basis, as well as our two actual children, as well as our five cats and a gecko at home. So great, great, great opportunity just to say thank you to them. And thank you to all the moms, the soon to be moms, the mom figures, the people that help out and raise the next generation. Uh, Thank you for doing what you do. We all need you. So just a big thank you to that. So let's get to in today's topic. I saw a video on social media which spoke about the fastest growing service lines at CPA firms. And not surprising, it was the CAS services, client accounting services, outsourced accounting, doing the books for our clients. And my initial response was, oh gosh, really? This is where we're going? We're just going to bring more in-house in to companies where they're already telling us they have too much work, not enough people. We're just going to keep adding work. I get it. Revenue's important. We want to be bigger and better. We think we can help people. And you know what? Once I get the emotional side out of it, because we do outsourced accounting and we forget about tax and insurance. We focus on what we're really good at. And I get it, right? Like there are a lot of good people at these firms that can do a good job. I get that. I was part of a big four firm. We spoke about tax, audit, and advisory. And this outsourced accounting stuff fell in the advisory side. I sat on a job for 5-6 months in my fourth year at that firm and sort of focused in on doing that outsourced work, mostly for government institutes where they couldn't hire. There was a ban on hiring, but because we had a contract with them for some other work, we were able to get in there and help them. It made a big difference to them, made a big difference to the community. So it's not all terrible. But I do have some concerns when we're pushing into spaces that maybe we don't have the expertise for. or where it's not a priority to our business. And again, I am emotional about this. I have strong opinions on it. So what I thought I would do is go to my good buddy and ask him some questions. And that buddy is called ChatGPT. So I, this morning, went in there and said, asked the two quick questions. Two fairly simple, mundane questions. And this is ChatGPT 4. I got these answers. My first question was, what are the benefits of your tax provider doing your bookkeeping work? And this is the response I got. And I'll read it, some of it, and I'll summarize other ones, right? So ChatGPT said, while there are concerns about having a tax provider also handle your bookkeeping, there are some potential benefits to this arrangement. Fantastic. So let's think about what are these benefits. Number one, streamlined communication. Having one provider manage both tasks and simplify communication. I can see how it's a benefit, but I've just spent 3 weeks talking about how communication at those tax provider level is poor at the moment. So it could exacerbate a problem, but I guess if you're all talking one language, hopefully less gets done at it. It says you need to update and consult with one party about your financials, which can save time, reduce the risk of miscommunication between differences. That is good. That misinformation where you think you said the same thing to two different people, but they come out with the different expectations, which we spoke about a lot, that could reduce, right? Like now you're basically just sending one question right. They're either going to get it right or they're going to get it wrong. At least it's, concealed to one, not one getting it wrong and one getting it right, or worse, both getting it wrong but different ways. So yes, I can get that. Streamline the communication makes sense. Number two is consistent understanding of financials. Tax provider who also does bookkeeping will have a deep, consistent understanding of financial situation. This can lead to more informed tax planning. 100%. Best tax planning is, when your tax advisor actually understands what goes on in your business. Not just seeing a balance sheet once in a while and maybe asking you some questions, but really has a deep understanding of the books. And I can see how having consultations around complicated transactions that's happened throughout the year, because you have to do the bookkeeping for it, can improve your tax planning. 100%. The counter argument to that obviously would be, if something weird is happening in your business, reach out to your tax provider. I recommend that to my clients all the time. It is very important. Even if the functions are separate, your tax provider does need to know if you're buying a new asset, investing in a new business, making a major change. So I get it. Tax providers doing your bookkeeping, they'll hear about it first, save some of that, improve your tax planning. Number three, and this probably should have been number one, is the convenience, right? Just less people to deal with, less places to go. I mean, I've had conversations with potential clients this year where they're like, I just want one-stop shop where I can go and do everything. I get it. General stores are sometimes good. I can get a bunch of stuff over there. But, when I'm trying to buy a high-quality product, specialist stores tend to be the better place. If I'm going to go buy a piece of jewelry for my wife that's very special, maybe I don't go to Amazon, I go to a specialty jewelry store. Maybe, right? But I understand the convenience side of it. It does make it a lot easier. One simple email, drop the documents in one place, one conversation, get it. Integrated services. This is an interesting one. I get how this could go. They write here, some firms offer integrated services while tax and bookkeeping are designed to work seamlessly together. This can ensure the financial strategies are aligned with both tax, bookkeeping, and compliance. So a lot of good things there that it does integrate, keep things in order, keep it in line. You can react a little bit better. I am a little worried when you're talking about tax and bookkeeping being aligned. They should be separate. You should have a tax book and you should have a set of management books, run your business books. They shouldn't be different, especially in the world that I operate in, where you're selling products. You have to have a set of accrual books. And I can do a whole episode on why that's important. But if you're selling a product, and 100% if you're manufacturing a product, you need a accrual set of books so you really understand your business. And that should be very different to your tax books. And if you only have a set of tax books, and because you think the integrated service will make your life easier, you are going to make business errors. So be careful of that one. I totally get how that can be helpful for very simple service type business, selling hours, a business like mine. My tax books and my accounting books can be the same. Probably not going to change the way I make decisions because I have to pay people. I might want to still see my invoicing on an accrual basis rather than cash basis. So it's a little bit of a hybrid still. So not perfectly aligned, but that is sort of, I can get that. I can get that for businesses that aren't manufacturing inventory, and really also for the ones that are selling inventory. Cost savings. This is the fifth point that they bring up. In some cases, building services with one provider can be cost effective. 100%. 100% that, especially if your previous bookkeeper isn't being good, like you're doing it yourself and you don't know what you're doing, there can be a major cost saving by saying, hey, tax guy, just take it over for me. Because my guess is if you're not doing a really good job with your books anyway, they're having to charge you to fix your books, which is not great. So being able to come to one spot, they take over this process, they make sure information is reconciled, 100% can be a cost saving. So that's it, all right? They give me 5 examples, and you'll see earlier later, they'll give me 5 reasons why it's a bad idea. But just to reconfirm, these are the 5 reasons, the 5 benefits why you might want to consider putting your bookkeeping with your tax provider. Number 1, streamlined communication. Number 2, consistent understanding of the financials. Number 3, convenience. Number 4, integrated services. Number 5, cost savings. Now remember, this is ChatGPT 4 giving us these responses. These are not my responses. I am going to somebody who's smarter than me and scour the internet to come up with these great answers. I did then follow up with the question, why is it a bad idea for your tax provider to do your bookkeeping work? This is the camp that I sit in, especially in the type of industry that I operate in, where there's a manufacturing of a product that is then held and sold. You need accrual books, and tax books are just not going to do it. So unless your tax provider has a dedicated team of business bookkeepers, people that are trained to be able to complete your books on the accrual basis or the hybrid basis that you need to be able to run your business and provide you with the financial information and insights, I strongly believe you need 2 separate entities. Be that a strong bookkeeper in-house, be that using an outsourced business like mine, or worst case scenario, let your tax people do it, but make sure that you have a consulting CFO level type person that can at least talk to you through what those numbers mean. You need somebody that can give you the insight on what is happening in this information that you're manufacturing and selling. But here it is. Here are the reason that ChatGPT gave me, and says tax providers also handling your bookkeeping can be problematic for several reasons, and 5 reasons, just like the 5 benefits. Conflict of interest. A tax provider might focus more on optimizing your tax returns, potentially overlooking comprehensive accuracy and detail required in everyday bookkeeping. This could lead to decisions that favor tax position rather than maintaining a clear, precise record for all transactions. This is number 1 for ChatGPT. And this is the number 1 reason why I am very against anybody going this route, especially in the area that's quiet. That's why I say keep tax and bookkeeping separately for this reason alone. I see it way too often where a team of accountants within the tax provider want to do the right thing, but they receive way too much pressure from the tax team to have the books in tax formats and quickly. This means that people get skewed by the tax team to make the books tax basis. This can be okay in most sections of the financials, but it is going to leave you some gaps in making good business decisions. The pressure will come from the tax team. Go scour any, just Google shortage of CPAs, shortage of tax providers, and you'll see why these outsourced teams within the tax providing firms are under so much pressure. More work, more clients, less accountants, move faster, gotta get deadlines. It makes for a poor position for your tax providers to be doing your bookkeeping as well. Lack of specialization. This one for sure, right? If it is a tax firm that happens to do some bookkeeping, this can be a real big issue where the tax preparation and bookkeeping are different specialities. They do not have people with the right skill sets. They're just trying to piece it together as an add-on service to make the life of their clients more convenient and really to protect themselves to make sure that they have better information to be able to do a tax return. This is probably going to be less of an issue on mid-sized firms and up, where they are specifically hiring for these roles, so it can become less of an issue. But again, you have to look out for the tax, the conflict of interest. Are they getting pressure from the tax team? And you really do need to discuss them and what type of basis they'll be doing these books for you. Reduce checks and balances. This is an interesting one. We set up team basis. We have bookkeepers that are reviewed by senior accountants, that are reviewed by a controller, that then talks to the client. But then we still do get checked on by the tax provider whenever they look at the books, right? So it's an extra set of eyes, and an extra set of eyes is always a good thing. You do run the risk if you're using your tax provider that the same people keep looking at it, and it's very hard for them to identify an issue because it's the same set of eyes looking at the books over and over and over and over and over. So it becomes a bit of a self-review process. And this is when, if you are going to go this way, I do recommend get a strong controller, a CFO that can come in and talk to you about your financial information. It's another set of eyes to make sure things are going in the right direction. So this can be a problem, but you can mitigate this risk. But be careful. There's just going to be less review. They're going to put good review process in place and for your tax return. The accounting side, they're just trying to get through the process. Dependency and risk. This can be pretty tough, right? There are the issues when you're using one-stop shop that you can run into service delivery issues if somebody gets ill, somebody decides to leave the business or the practice, they decide to close down. That happens. People are retiring all the time. So, be careful from that standpoint. And there could be no plan to go forward. Or there's a lot of good clients out there and people are firing clients. And not necessarily because you're a bad client. You might just not be part of their strategy anymore. So the problem then becomes that they're going to stop doing your tax return and they stop doing your bookkeeping. All of a sudden you're scrambling for both. And that's really tough. Now, obviously those risks are there if you use two separate operations, but there's a workaround if your tax provider goes out of business, your bookkeeper's still in place, or if your bookkeeper goes out of business and your tax provider is still in place. It does help reduce that dependency on one person. And then again, get a strong CFO in place to help you as well. No harm in doing that. The last one, which is pretty interesting because, one of the benefits was cost savings. And the last point they put here is potential higher costs. And that, can be very dependent on you using. If you are using a CPA firm, you will be paying a higher average rate than an outsourced accounting specialist. Fact. And definitely going to be more expensive than if you're using somebody that is not, affiliated. It's a one-man band that's sort of doing books on the sideline. They've got some specialty and they're helping you out. You're going to be paying more if you go to a CPA firm to do your bookkeeping, 100%. They've just got bigger overheads. They're hiring CPAs. So that comes from higher cost. So sure, it might come with some extra expertise. But again, we spoke about, are they putting specialists in place? Maybe not, right? So you have to be careful. It can be really expensive. We've seen it before where we've gone up against CPA firms. Our proposal comes in at $2,000 per month. Their proposal comes in at $2,000 per month, but the scope of work is 40% of what we're doing. Or we come and speak to a client. They've been paying $4,000 a month for their bookkeeping. We come in without seeing that bill, go, well, we think we can do it for $2,500 a month. And that's a significant saving. Part of that's the way we set up. We've got an office in South Africa that reduces our costs. And part of it's just the way, we just don't have the same overheads that these CPA firms have. And I don't require people to have a CPA license. Love that they do, but I don't. So it is, there's just less cost involved in hiring someone that isn't a CPA than it is for a person that is a CPA. So be careful of the costs. So in the mind of ChatGPT, there are 5 downfalls for using tax people to do your bookkeeping, and that's conflict of interest, where your tax provider has too much pressure on the bookkeeping team, lack of specialization if the firm does not have a specialized bookkeeping team and they're trying to piece it together with the resources they have. Reduce risk of checks and balances because you just don't have a fresh pair of eyes looking at the books. Dependency and risk, relying on a single provider can increase your risks for sickness, closures, all those types of things, and then the potential for higher costs depending on the provider you're using. This is a pretty balanced look at what are the pros and cons of using your tax provider to do your bookkeeping. I am a strong believer that your bookkeeping and your tax should be separate. Those could live at the same firm, but you have to be aware that those departments need to be able to operate independently, even if they're communicating as one business. You want to know that the people doing your bookkeeping have you as a business owner in front of their mind, and they're giving you information in the format that you require it to be able to make good business decisions. And a set of tax accounts is not a way you should be making business decisions. You also want your tax provider to be thinking like a tax person who's trying to reduce your tax liability for you. So I strongly suggest to use a separate bookkeeping service to a tax provider for best results. One gives you the information to run your business, the other one is giving you good decisions to run the most efficient tax liability. I think this is particularly important in businesses who are manufacturing and selling inventory. You cannot be doing cash basis for inventory businesses. You cannot make a single decision about that because you're going to pay for stuff way before you sell it. I highly recommend keeping your bookkeeping and tax separate. And even if that is within the same firm, make sure that they're operating independently. If you want to be successful at business, separate those two responsibilities, even if those people are very well connected and talk to each other. Make sure each team understands their role and has you at front of mind in helping you be successful. Convenience is not a good answer. Make sure you're selecting providers that'll help you succeed. And this is why I say keep tax and bookkeeping separate. Thank you for your time today. Have a wonderful week. Be kind. Goodbye.